Adjustments for inventory. We saw that the raw trial balance leads to an erroneous income statement. Remember that in the trial balance, we checked off revenue accounts, that is accounts that will go into the income statement, that is purchases, rent, salaries, sales, and shop expenses. We report them into an income statement beginning with the sales, then the purchases, presumably the cost of the goods we sold, and then rent, shop expenses, and salaries. But we know that this computation here is erroneous, and the gross profit of 600 euros is incorrect, because the purchases here, 6,400, are way more than the cost to us of the goods actually sold. In order to compute the correct cost of goods sold, we shall first of all make an inventory of the goods unsold and sit in the firm at the end of the accounting period, say the 31st of December. We may actually already know the amount in inventory thanks to real-time monitoring like we did. We had the journal of entries and we kept track of the inventory day by day at the same time. For example, the 12th of January, we purchased 100 items at 40 euros a piece from Deirdre, and therefore at the end of that day, or at that transaction, we had a final inventory of 100 items. Then, on the 18th of January, we sold 30 items at 100 euros a piece to Sally. New final inventory, 70. Then we purchased some more goods at 40 euros a piece, 60 more items, so 2,400 euros, that was the purchases. New inventory, 130. Then we sold 30 and 10. So we had a final inventory, physically, of 90 items. This is given readily from our real-time monitoring system, if we may say. But anyway, a physical inventory is also legally mandatory in most countries. That is why, in France, for instance, shops close a day or two at the end of the accounting year to count all what they have on shelves. And this may also lead to a measure of theft, by the way. Here's a sign on a shop next to where I live that I saw a few days ago. Le magasin sera fermé ce jeudi pour inventaire. The translation is, the shop will be closed this Thursday for inventory. So the final inventory in our example is 90 items multiplied by 40 euros per item. That's the value to us, or for us, of this final inventory. That's 3,600 euros. And we shall make a special double entry in the accounting system into two new accounts. One of them called Closing Stocks IS and the other one called Closing Stocks BS. The Closing Stock IS is credited the amount of the final inventory, Closing Stock IS, credited 3,600 euros, and the other one, the Closing Stocks BS, is debited the same figure, 3,600 euros. So this is a balanced double entry with the two numbers with the same value. On top of that, because we are in the first accounting cycle, we create an account called Opening Stocks IS and we debit it 0. This could be omitted, but since the trial balance of the next accounting cycles will have an Opening Stocks IS, for consistency we add it also in the first accounting cycle. So our partially adjusted trial balance now has evolved and now looks like this. We had all the accounts that we had before, plus 3 new accounts. Opening Stocks IS, debit 0. Closing Stocks IS, credit 3,600. Closing Stocks BS, 3,600. And you will not be surprised to know that this is a revenue account. This will be a revenue account, whereas this will be a capital account. That is, these two will appear in the income statement, whereas the last one will appear eventually in the balance sheet. And to finish with, our income statement, still preliminary by the way, will now look like this. Sales on top, 7,000 in credit. We report the opening stocks IS here, debit 0. The purchases are the same figure as before, 6,400 euros, but we also include here the line closing stocks IS on credit, 3,600 euros. So the new gross profit is actually 10,600 minus 6,400, and that's 4,200. And by the way, here we can readily read the cost of goods sold, which is 6,400 minus 3,600, and that's 2,800 euros. So the top part of our income statement now is correct, but there remains to study the other year-end adjustments that take care of more consumption that do not appear in the journal. We have already talked about it, and that will be the topic of the next lessons.